Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on CMG NKE GoPro Twitter daily weekly time frame as usual. CMG bulls ran out of steam today, seeing some consolidation. It's normal, healthy consolidation at this point. It's on low volume compared to the bull volume on the way up, which is exactly what the bulls want to see, and we're holding the 50-day moving average support at 413.03. So as of this point, bulls are still in control. We could consolidate another day further, and that would remain the case. It would pretty much take losing this middle Bollinger Band support on consolidation, which is down around 410. Lose that level, and it would be more significant than the bulls wanted to see, but I am looking for the bulls to form a higher low and then make another move back up to this recent high of 418.67, a new resistance. Weekly time frame holding the middle Bollinger Band for the 5th test in a row, seeing some significant follow through to the upside. It's going to be the highest volume week we've seen in 5 weeks, and it's going to affirm that the bulls are trying to head back up to this double top of 434. It's a very key resistance level. The Bollinger Band is up there as well. That upper Bollinger Band needs to begin ascending to the upside to create some room for the bulls, but as of right now, that's still standing as backup from previous price resistance, which rejected from that upper Bollinger Band on the previous 2 attempts. So looking for some potential further consolidation. Again, CMG does not correlate to the S&P 500 like many other names do, so it will be able to do its own thing, but we need to see a new higher low form before continuation to the upside. NKE bulls showed up after the bearish dump to earnings, much higher open and pretty strong follow through. Strong close up near the high of the day, working on filling that gap. 55.55 is resistance, and then the next level will be previous support. 56.02 will now act as resistance as well. So the bulls have some momentum heading to the upside. That's solid bull volume there as well. Obviously the bear volume is more significant, but in response, that does show some nice follow through. So we'll see if the bulls can build off this momentum as we work on filling the gap. There's not a ton of resistance levels because of this big gap until we get to this previous price history between the $56 and $57 range. Looking at the weekly time frame for NKE, we are bouncing off the 50-week moving average support. I would say it would be an extremely successful recovery if by tomorrow we can close above 56.17 and hold this 100-week moving average for the 3rd week in a row. I would say that would be pretty much the ideal scenario. Bulls couldn't have hoped for a better recovery if that remains the case, or if that is the case tomorrow after the close, but we still do need a good chunk of upside moves from here, 80 cents to the upside. GoPro rejecting from the daily middle Bollinger Band resistance. The range I'm now watching on GoPro is 816 support, followed by 847 resistance. So the low and the high of that range, and we can see we have a bit of a tightening pattern where we have the high of the gap up, low of consolidation, lower high, volume is dropping off as well, and when we do break this range, we will likely see a spike in volume accompanying it. And on the weekly time frame for GoPro, we are not following through and confirming that bearish or that bullish reversal candlestick. So the inability for the bulls to get that follow through, definitely notable, and we continue to reject from these weekly exponential moving average resistances. So we were highlighting the inability to get over these exponential moving average resistances back here in mid-February, and now we're seeing that same thing, showing that the bears are still in control longer term, although the bulls are holding up from this gap up still. If you are just waiting for an entry here on GoPro, a significant loss of 805 support with a lack of support filling this gap, that would be a clear bearish signal. Lose 805, that can be your entry to go bearish. And as of right now, bulls not really seeing much follow through, and obviously the market environment is not going to be helping these bulls out with the weakness we're seeing in the S&P 500. Looking at Twitter on the daily time frame, yet again, the exponential moving average resistances. Over a month, we've been rejecting from these levels. I can't remember the last time I've seen a stock on the daily time frame reject for 6 weeks in a row from these exponential resistances. It just shows complete weakness and the bears in full control. So we did establish a new support level of 1473 going forward, and our new resistance is the high of today, 1505. And really, I won't believe the bulls until we can break 1558 to break this clear lower high pattern that is in play on the daily time frame. The middle Bollinger Band resistance is getting closer and closer to the price, and it's all about this exponential moving average. The weekly time frame is a bullish reversal hammer, but we have to confirm it next week in order to have any kind of confidence that the bulls are going to see some follow through. We have not seen 2 strong weeks in a row on Twitter since back here in October. That's a long time. It's been 5 months since the bulls have put together 2 strong weeks in a row. So they're buying the dip this week. They're going to have to see follow through and confirmation next week to the upside. And same story with this weakness in the market. These bulls really have their work cut out for them. These names were bearish when the market was strong, and now they're trying to see bounces when the market is weak. That's really not going to be helping these bulls. So that's what we've got heading into tomorrow. I'm watching the S&P 500 very closely with the technology and the financial sectors, and looking like we're going to see some potential further downside. At least that's how we ended today with momentum for the bears. I appreciate you watching. We'll check back in over the weekend. Have a great night.